Welcome to the C-Suite podcast that we are recording at Money20 USA in Las Vegas. I'm Russell Goldsmith, and together with Graham Barrett, we'll be chatting to a number of the speakers and attendees from the conference.
We're producing the show in partnership with Instnt, a leader in fraud insurance technology and a 5-star sponsor of Money20. We hope that through these short conversations with CEOs and senior executives from banks, credit unions and fintechs, we'll provide you with a real flavor and understanding of the topics and issues being discussed here at the event. Okay, I'm here with Jyoti Menon, VP Product, Lending and Mobile at Bread Financial. Lovely to see you at the show.
Great to see you. Thanks for having me. Very excited to be here at your booth.
Listen, we're here at Money20. What do you see as the key talking points this year?
So I always love coming to Money20, so I'll open with that. It's always fun to see, old friends, potentially new colleagues, now doing podcasts, who knows what's next. I think this year is really going to be about back to basics. They even mentioned it on their website for this event. I think it'll be a lot about how we look at fraud in the market, security. I think our customers are really looking for safety and soundness in all they do in the payments world, whether it's lending, whether it's cards. So I think that's really going to be a big focus, and even in just different meetings already around, how do we do better about knowing our customer and offering them the right solutions.
Well, I'll come back to fraud in a minute, actually. I'm keen to get some of your ideas around that, but let's just kind of go back to the start of the journey, if you like. What does the customer onboarding process look like at Bread?
Yeah, so we take a lot of pride when we think about our merchants and our customers, and really being as bespoke and white label for them as they like. So as we think about our merchant partners, we really look at, what is their company, what is their, what are they selling, right? And what's important to them in terms of what they're offering their customers. So for example, if they're really big on rewards, how do we give them the right rewards program to drive loyalty? So that's a really big piece of this puzzle. The other is also around, once someone is a customer, how do we make it as simple as possible to service their account? So in our account center, how do we make sure that they're able to redeem the rewards that they have received from shopping at any of our clients? So that's really important to us.
Now you have the Bread Financial app, don't you? Now how does that tie into your overall strategy?
So we've just launched our app for our proprietary card, our Bread Cashback, very recently. We're very excited by it. Got to give a lot of credit to the team who's been working on it, and it's a really fun app. I keep saying we've got some really fun assets in it, and so in terms of tying back to what we do, I think one of it is around, we did our brand refresh, or brand rebrand, frankly, to Bread Financial. So it's really about showing our customers how we are trying to be really looking forward, digital first, making really simple solutions that, again, drive that usage and feel like a customer is comfortable with us as Bread Financial. And so what we're continuing to do is we have it with our proprietary cards. How do we now start expanding it to our brand partners?
Okay. Now you mentioned fraud at the start of this interview. It's a really hot topic at Money20 this year. Obviously, fraudsters are now getting increasingly sophisticated with technology like AI. So I'd just be really keen to know what you guys are doing to combat that.
So we've seen credit card fraud definitely change a lot over the years. And as we start really thinking about some of these trends, what we're seeing, as you've mentioned, is really it's almost a whole market around fraudsters and a whole industry around it, which has been really crazy. And so what we really have to do is focus on how do we layer in the right levels of controls across our platform. So both at a merchant level, so that as we're bringing merchants on board, whether on the lending side or card side, we understand who they are and figure out how to underwrite their clients, as well as on our end as we work across our credit risk business, our marketing teams, our client partnerships teams. It's really important for us to bring different tools in and really looking at digital tools. I mean, everyone likes to talk about Gen AI. I feel like I can't be in my first podcast and not talk about Gen AI and put that in there. But there really is, I half joke about it, but how do we really get smart and get ahead and really use the data that we have to make the right decisions for our customers and for ourselves. Right?
Yeah, no, somebody I spoke to the other day about this saying it's really a race between the good guys and the bad guys.
Yeah.
Who's going to win. So, it's a huge challenge, isn't it?
Yeah. And it's across the industry, unfortunately. And so hopefully there are ways as we, work with different partners that are part of the larger ecosystem who have learnings so that we can learn from them as well.
Yeah. Well, listen, let's finish up. I know you've just released your latest American Shopper report. So tell us about some of the key findings of that report.
Yeah, absolutely. I mean, this is a great report that comes out. We really think about, different trends that are out there and, who are our customers, what they're seeing. And so as I think about that, running our bread pay product, what we've found and this report talks about is no loan is too small, which I think is a big, I don't know if I'd say it's a big shift, but it's definitely been a shift in terms of how people are looking at it. And we're seeing that in Gen Z, about 20% are turning to installment loans or longer term loans. So we're really starting to see that shift into that market, which makes sense, I think. And also as we talk about where, people are shopping, right? There's definitely, boomers still in the shop, in the stores and some of the big brands. We're seeing more of the Gen Z, the younger shoppers, more digital in what they're doing. So I think that's another really great area as we look at the future and how do we try to be as digital first and really meet our customers where they are. And that's where you start seeing the side of our business with both cards and lending from a purchasing and e-commerce and in-store perspective start to marry up really nicely with how we're doing our mobile app and really driving to a more digital model for our clients, because again, a lot of them, that's really where they are and where they want to be.
Yeah. No, look, I've had a look through that report. There's some great insights in there, so thanks for bringing that to our attention. Jyoti, Menon, thanks for joining me on the podcast.
Thank you so much for having my first podcast. Thank you so much for having me.
Thank you.
So I'm joined now by Justin Kamerman, the CPO of Instnt. Justin, welcome to the show.
Hi, thank you.
Now, you guys have launched Multipass today. Want to hear from you is more from the technical perspective. Can you just talk us through the product a little bit?
Yeah, Multipass sort of puts into action what you might have heard about decentralized identity, where users are given power over the identity to travel with them, to share. They have complete control of their identity, and it helps voice privacy concerns, moving away from decentralized databases full of user data that are vulnerable to attack.
Why is it so revolutionary then?
Well, to date, identity's been driven around what they call centralized data model, where each company or bank or business or the public library or the DMV has a database with user information in it. Usually you gain access to that system and use their services with a username and password. That username and password gives you no portability amongst any of those other vendors, even though you might have been through a rigorous set of checks to be onboarded by any one of those particular services. And fundamentally that's because that data lives inside those big monolithic centralized databases. The user loses power over his data. It's not portable, it's not transferable. He can't at a granular level decide who gets to use it, or after deciding that someone can use it, revoke that permission. With decentralized identity, it says we all just cryptographically, and it is very complicated, and that's what we've tried to do with this product of ours, is to take these open standards, these open source implementations, and wrap them into a nice SDK so that our users don't have to worry about all the intricacies that go on inside of this project. They just get to use it to put into action decentralized identity, where users have total control and privacy and portability over their identities.
Can you summarize the key features?
Yes, so what we've taken, again, it's based on an open standard. It's leveraging open source tools that allow you to implement these open standards, but what we've done is wrapped sort of a software development kit so that users can put these capabilities into their own applications on their own websites, so they can onboard people without friction once they've been verified at one place or another. They can do passwordless login. They can build wallet-like capabilities into their own applications, their own websites. Again, all built on these open standards that allows this portability that I'm talking about, that's fundamentally linked to decentralized identity.
And how does this fit into first-party fraud?
Well, any kind of fraud is usually a misrepresentation of who someone is or their intentions. Sometimes that comes from synthetic identities where the person isn't real. Sometimes it's third-party identities where identities have been stolen. First party means it's a real person, but using a portable identity gives you that assurance that you know who that person is. That allows a traceability to their financial history, possible defaults, any transgressions, and those are all very strong signals towards reducing first-party fraud.
Final question for you. Why should the fintech industry be so excited about this?
Because you've been stuck in a world where Apple and Google and anyone with one of these big wallet providers is telling you that you're moving towards a more private, secure, portable identity world by using their product. You're not. These are walled gardens. They're basically just moving the centralized databases to the edge. They put it on your phone, but it's essentially still a centralized paradigm. The user doesn't have full control. He doesn't have portability. He doesn't have the right to privacy, and he doesn't have the right to revocation of these credentials.
Fantastic. Justin Kamerman, appreciate you summarizing all that for us, and thanks for joining the show.
Thanks very much.
So we're now joined by Sara, Beth, Felix, the co-founder and chief anti-money laundering officer at Acceleron Bank. Sara, Beth, thank you so much for joining us.
Thanks for having me.
Now let's start by, what I'd love to do is just get a little bit of your background in the whole anti-financial crime. Could you, just start with Beth?
Yeah, so I've been in the anti-financial crime industry for 22 years. I know it's hard to believe, but I got started. I was actually a stockbroker out of college. Then 9/11 happened, and that kind of changed my view on my end goal. And then I found out I was really good at predicting criminal behavior, which was an unknown talent of mine, apparently. And so I started running the world's largest check processor, their fraud program that they had at the time. This was 20 years ago, and lots of people still wrote checks for lots of reasons. We obviously live in a different world now. But and then from there, I went into the anti-money laundering side of anti-financial crime and never looked back.
So how have those experiences informed your decision-making and your strategy at Acceleron?
Well, I've had my own consulting company for the last 12 years, focusing specifically on anti-financial crime, really in anti-money laundering and how fraud intersects with money laundering. And as we stood up this bank, having worked with offshore institutions that are trying to get an account at the FRB New York, and also working with other de novo institutions over the course of my career, I knew that I wanted to do something differently. I wanted to start with compliance, which most financial institutions, whether you're a fintech or a de novo or a neobank or a traditional brick and mortar bank, a lot of them don't start with compliance. They start with the things that make them money, like lending. And I knew for us to really stand the test of time that I would need to incorporate, my 20 plus years of experience into making sure that our regulators knew that we took this seriously. This wasn't just a checkbox exercise for us. So my two co-founders, Damon and Andrew, we're 100% on the same page. We want our regulators to know that we take AML compliance very seriously. This isn't just a policy. This isn't just a risk assessment that sits there and gets dusted off every once in a while, and the board goes, oh yeah, I read it, and they didn't really read it. Which leads me to my next step that we took, which was to make sure, part of how you display that you take something seriously is not just saying, I take this seriously. You actually need to put actions with your words. And so what we did was we added 2 anti-money laundering spaces to our board, which is unheard of. There's not a single bank, at least in the United States, that I know of that has one board position committed to an expert in the anti-money laundering field, much less 2. So Dennis Lormel, who is retired FBI, he's our other board member, and he has 40 plus years as a federal law enforcement agent, both in money laundering and terrorist financing, countering those efforts. So that was part of how we wanted to start this bank, was to both word and action to our regulators that we take anti-money laundering compliance very, very seriously. And that's really kind of a culmination of my 20 plus years in this industry, was seeing how these banks really failed over time because they didn't have a board that knew what money laundering looked like, so they didn't care. Right? They only cared once the bank got criticized, and then they had to pay millions of dollars to get out of an order. And we never want to get there. And one of the ways that we prevent that is to have people on the board that know what money laundering looks like in real life. So
you've just spoken on a panel about real-time payments, fraud, and FedNow.
Yeah.
What were the key highlights?
I think one of the things for FedNow, at least in the U.S., I think it will be very interesting once we see the full maturation of FedNow, which should come in the cross-border payment space. But we've seen basically almost a 400% increase from when it went live in July to today. Well, yesterday was the last time I looked. And that's a lot of banks that have now signed up with FedNow. Now, I do know a lot of those banks have had 0 payments sent or received under FedNow yet, but they're still shown as a participant. One of the things that we covered about fraud was that a lot of times these smaller institutions, because we're not seeing a huge uptake by tier 1 institutions in the U.S. because they basically already have their real-time payment solution through the clearinghouse. So the Fed now is kind of focused for smaller institutions, which is about 90% of the banks in the US are 30 billion and under in assets, which is a large swath of banks, and credit unions as well. I say banks generally. But one of the things we're seeing is that they don't even know their fraud landscape now, and they aren't educating their consumers well enough. And then they want to go into something that's real time that you can't claw back. And so I think while I'm all for innovation and faster payments, I think from a compliance perspective, also from a fraud perspective, if it's not done well and done in light of the resources that the banks use today, then Fed now should be kind of a pipe dream a little bit for some institutions, and that's what we talked about. We had a person on from Citi, and of course they are global, so they're working with the real-time payments in a whole bunch of countries. And what they talked about was how various countries who use RTP rails, that they're on the same data schema. So the same data that's sent is also the same data that's received. There's some KYC stuff that's used. In the US, we aren't really there. I know Fed now wants to use ISO 20022, but from what I've seen, the field controls aren't there, and data drives whether or not you know something's fraud, and data certainly drives compliance. So that was a large part of what we talked about today, is how do we get US institutions ready for the data, because data can be friend and foe. How do we get U.S. institutions ready for data before they walk down that path of Fed now? One of the other big things, and this got some oohs and ahs, in like a good way, was a lot of institutions, both in Europe and in North America, they go down this instant payment path, but a lot of times they don't look at their insurance coverage. Every bank has an insurance coverage bond that outlines various avenues of fraud in which a loss over a certain dollar amount or an aggregate amount gets covered by their policy, right? Like a normal insurance policy. Well, every bond that I've read, and I joked on the panel, and I was like, because I have a life and I read insurance bonds for fun, but every bond that I've read from global insurance writers aren't addressing Fed Now in real-time payments. And what we know to be true with Fed Now is that you have a $100,000 limit most times. I mean, that is a huge loss for a $5 billion credit union or bank in the US. And they're going down this Fed Now path, and they're so focused on this monitoring aspect, and they're not going back to the basics, right? They aren't going back to look at their insurance bond that was written in 1980. And that's one of the big things that a lot of institutions in the U.S. have to get back to, basics. And a lot of times it's surprising, because they will go to their insurance agency and they'll say, hey, I want to reduce the single payment threshold from $100,000 loss to $50,000 loss. And it only changes their premium $20 a month. I mean, that's amazing. And what a cost saving. But while that's good for normal electronic payment, Fed Now is not something that we're seeing covered under some of the bonds.
Final one for you. What are your thoughts on the evolution of universal identity into areas such as decentralized identity?
I personally have a problem with any entity, any body, not anybody, but any body, having access to all of the things about me. Now, I know there's some benefits, right? I get to say I don't want to share this data with this person, right? It kind of puts it puts me more in charge of what people do with my data, so that aspect is good. But the thing that no one ever talks about, that's just kind of implied, is that there's still a centralized repository of information about me that somebody, yes, it's under lock and key, but somebody somewhere in some capacity has access to all of the things about all of the people. And that bothers me from an identity theft, anti-financial crime type of view. So.
Well, listen, thank you so much for all that. But for now, Sarah, Beth, Felix, thank you for joining us.
Thank you.
Okay, I'm here with Mark diTargiani, who's the Senior VP Venture Banking at Pacific Western Bank. Nice to see you, Mark.
Good to see you, Graham.
Well, tell us a little bit about Pacific Western Bank, who you guys are, and maybe specifically how you approach things like customer onboarding.
Yeah, sure. So Pacific Western Bank is a community bank with a venture banking branch. I work in the venture banking group, and we bank and lend to early stage startups that are VC backed, both in technology and in life sciences.
What about the onboarding then? How do you approach that?
We have a completely digital onboarding, and we've replaced the old paper and PDF processes, and it's really important to have that these days because that's what our customers are expecting. They want to be able to open up an account quickly and open it up anywhere and on any device, and we're able to do that.
Yeah. Now listen, a hot topic at Money20 this year is fraud prevention. It's becoming ever more sophisticated with technology like AI. How do you respond to that?
The digital account opening process is been a big part of the response, right? And we've worked into that process a KYC and a KYB process that is eliminating some of those fraudsters from ever getting into the bank and opening up in a bank, we're making sure that everything's accurately corrected, that collected, that things are accurate, details, I's are dotted, T's are crossed, that sort of thing. And we really, again, we're allowing the customers to open up those accounts from anywhere that they can. And when you do that, you have to have those safeguards in place, right? So, we're working with some of the fintechs to make that a digital process for us.
Now, the other thing I'd like to ask you about is your merger with Bank of California.
Yeah.
So how did that come about?
So, it's been an interesting year for banking and for venture banking in particular. And after the disruption of earlier in the year, we got a little bit of the contagion spilled our way and ended up losing some deposits and had to rejigger our balance sheet. And in that process, we approached Bank of California. They approached us. I'm not sure kind of who approached who first, but the merger was officially blessed by the regulators last week.
Oh, no way.
We should be closing in about a month once we get shareholder approval. So we're real excited to team up with the Bank of California and bring the two banks together and create a stronger bank and ultimately a better customer experience for our customers.
Yeah. What's it going to mean for you? Is it going to be quite transformational?
I think it is. We really want to be a tech-first bank. That's a big priority. I was just sitting with Jen Taylor, who runs up our digital banking, and we were talking a little bit about the roadmap, and it's exciting. And Bank of California, led by Jared Wolf, he's committed to the bank being a tech-first bank.
Yeah. Well, look, there's loads of exciting things going on. You got that merger. You've also got this startup services platform.
Yeah.
How does that work?
Yeah. So, we know that early stage startups, they raise money and making that money last as long as possible is really important, right? So we have a startup services platform that gives startups free banking. We give them a high yield money market account. So we're trying to save them some money, maybe make them a little bit of money, and allow them to spread that runway out a little bit, right? So, we also work really strongly to connect our clients to various resources, right? And I tell my clients when they come on board that they get me to work for them, and I'm going to go find them money or clients or employees or do whatever I can to help them. So that's how we build that relationship with our early stage clients. Yeah,
you sound like you're really energized about the future. Are you looking forward to the next 12 months?
Very much so. I think we're gonna see some interesting things happen in the market, but I think with our merger and the way we're positioned right now, we're ready to take advantage of it.
Okay, well, best of luck with that. Mark diTargiani, thanks for joining me today.
Thanks, Grant, appreciate it.
Okay, I'm here with Sara Hafner, who is SVP Global Partnerships at Liberis. Nice to see you here today, Sara.
Nice to see you too.
How's your Money 2020 been so far?
It's been great. It's amazing to see everybody here, meeting up with some old colleagues, networking, attending the events. A lot of big focus on identity this year, and a lot of great founder conversations.
Yeah, what have been some of your favorite sessions so far?
I loved the one where we talked about KYC and KYB and the network effects and how AI can really help with it. Love to see some of the information that's shared on more of a global scale with a focus on LATAM. For my company, we're really expanding into new geographies, so hearing how others are doing that has been really fantastic. And then some of the meetings just talking to founders who have new ideas, who have brought businesses up, sold them, and now we're kind of trying new things again. It's really inspiring.
Now, Liberis is a leading global embedded finance platform. I hope I've got that right. How does it help SMEs and female entrepreneurs?
Sure. So if you think about it, embedded finance really makes anybody a fintech. So it takes a non-financial partner, such as an acquirer or a booking platform, and it allows us to embed our lending solutions into it. What that means is that merchants or SMBs who are busy doing their business can get and access finance when they want and where they want it, in a format that's easy for them, that they understand. They don't need to go to the bank, fill out a long application or the high street. So it's a simple thing. They're able to do it almost when we're all sleeping at night, when they're having a pause of their business, and that really democratizes the access to capital for them.
And tell us about this new partnership you've got as well with this Vagaro, is that the name of it?
Vagaro. So Vagaro has a merchant services division, but they're very much focused on the health and beauty space, spas, wellness, providing a booking platform and really all access to any of the merchants who are in that sector and industry. What we're able to do is to provide, we're powering Vagaro Capital, which is allowing their merchants to access financing from $1,000 up to $100,000 in a 4-click process. So staying within the Vagaro ecosystem, clicking on it and making it happen. And the $5 million that we funded to date in the first month, about 80% of that funding has gone to female-owned businesses, something I'm particularly proud of.
So that's a key focus, is it, with your partnerships? You really want to drive that female entrepreneurship?
100%. I think for me, being a female, driving female entrepreneurship or underserved areas is really important. But in general, focusing on developing any small business and providing that impact to them where they might not have gotten finance otherwise. One of the things we provide is a pre-approved offer. So that takes away that fear of rejection that a small business also often has when they're looking for funding. It's also easy and very transparent. Unlike things that have an APR related to it, embedded finance and revenue-based finance gives you a fixed fee up front, so that small business owner knows exactly what they're having to pay for that funding, and oftentimes can get funding in as little as 48 hours. And when you look at the impact that makes not only to female businesses, but really small businesses overall, it allows the bakers to get back baking and the financiers to work on their finance.
Now give us a few more insights maybe into the business. How do you approach things like customer onboarding?
So we look at customer onboarding in 2 different ways. One is onboarding the large partners who provide us access to merchants. That's completely white glove. These are the large companies like Vagaro, who people have heard of, or WorldPay. So that process is, very much hand in hand, a great partnership. But then we also need to onboard the merchants who are taking on the financing. And as you can imagine, that's a little bit different when you're talking about Jane Doe on the high street. So a lot of that is, understanding who they are, checking their transaction files, what their records are, making it as frictionless as possible and as quick and easy as possible.
How does that merchant experience kind of evolve then once they've got access to your platform?
Yeah, so I think once they have access to the platform, it's really providing them the information and the data to both understand that funding that they have, the repayment schedule, what it means to their business, and the access of what they can use it for. So giving them notification about when it's paid down to a certain amount that they can renew, ideas for what new capital can be used from, and really always providing them the information, again, in the environment and in the ecosystem that they want and that they're currently using to make their lives a lot easier.
What does the future hold? Is it going to be more partnerships like the one with Vagaro, do you anticipate?
I hope so. It's been a fantastic partnership. We're really focused on, a distribution explosion. So launching in new geographies, we're launching in Canada this fall, and then some European markets in early Q1 of next year. And then understanding the products and services that are like the revenue-based finance that will also help a newer area of merchants in a similar manner.
Yeah, well, good luck with that global expansion.
Thank
Sara
you.
Hafner, thank you very much for joining me today.
Thank you. Have a great day.
Okay, joining me now is Alex Jimenez. He is Managing Principal Financial Services Consulting at EPAM Systems. Alex, nice to see you.
Nice to be here.
Well, give us an intro to EPAM. Tell us about what you guys do.
So EPAM, we are a digital transformation company, and what does that mean? It means we work with organizations looking at their business strategy, which is actually where I come in, and then we also look at the experience that is being provided, so we have designers and folks like that who build great customer experiences. And then the DNA of our company, the majority of our team is the technologists. So software developers, experts in all kinds of practices, cybersecurity, AI, blockchain, you name it. And we cut across all industries. And while I am focused in banking in the Americas, we have experts in all kinds of other industries.
Now, we were together last night. There was a panel session hosted by our partners Instnt at a bar called Money20 here at the Venetian in Las Vegas, and that was all around universal identity. Give us some of the highlights of that conversation.
It was great. Prior to the discussion I had with Instnt a couple of weeks ago, I had no idea what Instnt did. But the idea of having a portable identification that you own, that you can then present to anyone, whether it's a bank or a hospital or you name it, to identify yourself, but that you own that. To me, that's a fantastic idea. And the fact that you can enter all your information that's required, but you're not giving it to the company. You're pretty much saying, look, I have proof of who I am and what I'm about, and given the handshake, if you will, between that, the process can start, and you get rid of all the friction that we have in banking and in other industries where you have to prove who you are over and over again. I love that.
Yeah, and how far away is this, do you think? I mean, it seemed to me on the panel session this is becoming almost inevitable. We were talking about the history of finance, from credit cards, from checks to credit cards, et cetera, et cetera.
Yeah.
So how far away could this be?
I think it's a range of, and this is something that we actually discussed yesterday. I think there'll be some early adopters, both from the banks and from the consumers, and there are some laggards. So when are the laggards get onto this? It could be 20 years from now. But I think the leading edge, the early adopters can be there 5 years from now or even less. It also depends on the market. I think some markets are more ready for it. I would say Europe is probably more ready than the US. There's a lot of confusion about privacy and so on, and I think Europe has done a really great job with GDPR and other things that has allowed people to be a little more comfortable about some things that, in the US we're not quite there yet.
Now, we're talking about some of the key topics here at Money20. Obviously, fraud is a huge thing, particularly in the hands of these ever more sophisticated fraudsters using AI, etc. So, what are some of the key challenges that your clients face in that space?
Well, the weakest link, it's always the human element. And so, when I talk to banks about their biggest challenges, it always comes back to these stories of my client gave their credentials, or my client believes that they're paying somebody who doesn't really is who they say they are, and that continues to be the top issue. Obviously, there's going to be some really complicated issues from a technology standpoint as we go forward. Things that we think we have addressed today, like encryption. If you have quantum computing, encryption might be going away, at least the way we do it today, right? So organizations started thinking about those things. It's like, all right, we thought we had answered that. Now we have issues thinking about the future. So it goes the gamut, right? From really highly technical stuff, from how do we teach people not to give credentials to anybody?
No, it's an absolute minefield, isn't it? And I'm just sure that it's going to be...
And then there's AI on top of that.
Yeah, well, what do you think about that? I mean, how much of a challenge is that going to pose?
Well, it used to be that you could easily count and figure out who was trying to phish you because the language was not appropriate. There was a lot of spelling and so on.
Maybe the email address. Whatever.
Things just didn't look right. Now you can just write it out in your bad English, put it into ChatGPT and say, please make it grammatically correct. And all of a sudden you have a beautiful, set of writing that people are going to fall for because they think, hey, this does sound like a bank. So it'll be interesting.
Yeah, it will be interesting. Well, look, thanks for sharing all those insights. It was great speaking with you on the panel last night as well. So Alex Jimenez, have a great show.
Thank you so much.
Okay, I'm here with Ram Palaniappan, the founder and CEO of EarnIn. Ram, nice to see you.
Good to be here.
You're speaking on a panel session around financial inequality, aren't you? What are the key points you're looking to make in that session?
I think there's lots of things that we've accepted that lead to more and more inequality, and we don't seem to question those. And so I'm hoping that the panel will sort of talk about those and hopefully get people thinking about those problems and how we can solve them. Common ones are, we know that about half the country can't find $400 in an emergency. But if you want to go get a new apartment, you've got to put 2 months of rent down as a deposit, so it makes it really tough for someone to move. The same thing with when people don't have much money in their bank account. Just the fact that we're getting paid every 2 weeks is also complicated for people who are have lower incomes. Like, you could wonder why we paid every 2 weeks. We don't have to get paid every 2 weeks. So I think it's things like that that we've sort of accepted, but bit by bit they make inequality worse and worse and worse.
So what sparked the idea for EarnIn then? Where did it come from?
This is quite interesting. I didn't set out with the intent to start a company. I was working at another company, and then I heard that one of my employees was running into overdrafts and taking out short-term loans. And I was surprised because I thought we were paying everyone well. So when I spoke with her, the problem that she had was she needed money the next day, couldn't wait till the following Friday. It was already halfway through the week, and so I said, we'll just pay you for the days you already worked. And I couldn't make our payroll system do that. And so I just gave her the money that she had already earned and said, we'll settle when the payroll system finally runs. And I landed up doing that for a handful of my employees for about 4 years. It was completely in the office, in person. And I left the office, I left the company, and they wanted to know if I'd still do it for them. And like what I did for them is something that happens in millions of businesses where you see the small business owner or like the store manager does it for their employees. Anyway, so the employees wanted to know if I would continue to do it for them. I didn't mind. These are people I'd seen in the office for years. So I continued to do it. In the beginning, it was over Instant Messenger. And then that was a little bit difficult to manage because I keep getting messages during the day. So I built a really simple web form. And then when I had this web page up, then people who I didn't know tried to use it. And then I decided I'll try to do it for them as well. And what I realized is that if you give someone access to money that they've already earned when they need it, their life is much simpler. They're paying all their bills on time. No more late fees on bills. Bills aren't piled up on payday with those late fees. No more overdrafts, no more loans. Life is much simpler.
Okay, so that's the background. How does it actually work?
So it's actually really simple. So our customers will basically download our app from the App Store, iOS or Android, set up an account, they give us some information about where they work, as well as where they need the money to be deposited into their bank account. And then we're able to sort of calculate how much money they've earned. We show them how much money they've already earned, accrued, but hasn't yet been paid out. And whenever they want, they can choose to move that money into their checking account.
Okay. Brilliant. Now, I was looking on your website, and it says your aim is to build a more equitable financial system, which sounds amazing. But how does that actually work in practice? Can you give us some examples?
So the one that we deal with a lot is just the rigidity of the pay cycle. It's such an archaic system. Nothing else in our lives really works in a 2-week batch. I mean, imagine if Google said, give me all of your search queries and every 2 weeks I'll give you the results. You wouldn't use that search engine, but that's the kind of payroll system that we have, and we're all forced into it. And now we're trying to create an option, give consumers choice.
And are there some like examples of people you've actually helped?
So let me think of a few. So there was one person who I met recently. She works at a hospital in Columbus, Ohio, and her daughter has a passion for dance. And she has to pay for the dance class at the beginning of the month. And she wouldn't have been able to do that without EarnIn. And so to me, it's amazing that through our app, her daughter is able to follow her passion for dance and participate in dance competitions.
So yeah, it sounds like the business is taking off and it's going well. What are the challenges that you're facing at the moment?
So I say there's like, whenever you're running a business, the business comes with lots and lots of challenges just to run. So there's that complexity. I think also when you're trying to do innovative financial products, you sort of have to figure out what is possible, what is not possible from the technology point of view, but you also want to get the regulations to support what you're trying to do. So those are kind of been the areas that we're focused on.
We're talking a lot here at the show about customer onboarding, so we're keen to, all the different brands that we're speaking to, keen to get their thoughts. So tell me how that works at EarnIn.
So our onboarding today is usually how the customer sets up their account. And there's a couple of things that we do that is that are different from some of the other onboardings because our product is different. So one of the things that we do is we have to be able to verify that they're working at where they're working. And another thing that we do is we also need to see their paycheck history and their frequency. So we can verify the bank account, and in some cases we get information from the employers as well.
And what are you personally excited about in the next few years about where you can take EarnIn?
I think there's still so much more to do. Just the way the financial system works, it works well for people who have money, but it's full of pain points if you're on the lower income side, and I think we see lots and lots of those pain points. And that's what we're focused on building more solutions for.
Well, we wish you all the best with it. It was fascinating to hear the EarnIn story. Ram Palaniappan, thanks for joining me today.
Thank you so much.
Well, thanks again to all our guests who took the time to chat with us on Instnt's booth here at Money 2020 USA.
We hope you've enjoyed this episode. Please do follow us wherever you get your podcasts. And if you want to contribute to the discussion, you can find us on LinkedIn and all the usual social channels.
And finally, if you'd like to get in touch with us as well, you can do that via the contact form on the website at csuitepodcast.com. But for now, from me, Russell Goldsmith, and Graham Barrett, thanks for listening and goodbye.